Hi, I'm Will Bancroft, co-founder of the Real Asset Company, and today we're at Hinde Capital's office, joined by one of the best gold portfolio managers in the market, Ben Davies. Ben, thanks for joining us today.
Thanks very much.
I wanted to talk about Hinde, the structure of your fund, the asset allocation, and tell us a bit more about the outperformance of your fund against the gold price these last few years.
Right. Well, we've been going since end of 2007. I seem to recall that gold was trading around $690 an ounce, and it's been trading there for nearly 18 months, consolidating, and even my dead dog knew that gold was going up at that point. And the following week, gold was $775, and we'd started. It would have been nice to have that uplift for the fund, but we knew it was a long journey. We started off as a 50% equity, precious metals equity, 50% bullion benchmark. We're a long-only managed fund. We are, I don't like the phrase hedge fund for us, but we are an alternative investment manager. We have an offshore master feeder fund, Cayman, for high net worth individuals, up to institutions. And we moved in 2008, October 2008, to a pure bullion benchmark with a small adjunct of what we call junior mining equities from a long managed perspective. The essence of the fund is that we provide security of asset, which means that we have allocated physical gold held in Banque Julius Baer, and that's been a very successful relationship for us. It's audited every year, in fact twice a year by KPMG. Very born identity, going down into the vaults to have a look, very exciting. And actually it's always really, it's very alarming how small your tray of gold is, but at least it has a good value. Since we've moved to that benchmark in 2008, the fund has outperformed gold 15% annualized a year, which I think equates to around 76% in percentage point terms above the gold price. Our whole auspice is to try and create what we call a significant return in excess of the spot bullion, US dollar spot bullion price, which, as I said, to this point has been around 15% annualized. I think the issues with MF Global actually really highlighted to people why our fund structure is the way it is. We effectively have two prime brokers. We have Banque Julius Baer, where we have the physical allocated gold, and we use New Edge, which is backed by French bank Soc Gen. If it would be a little bit Machiavellian, we always felt that if we went with them, not only because they have good prime brokerage in terms of for our needs, and we're pretty plain vanilla product, also they have the backing of the French state. It's a bit naughty of us, but the truth be told is, should there be ever be an issue with these banks or these investment banks, we felt that we could move very quickly to move capital or cash across to Banque Julius Baer. And that really was a major issue for some of the MF Global funds who had monies investments there. They couldn't set up bank accounts elsewhere. Now obviously a lot of big funds have dual prime brokers, but many funds don't. And that was a real problem because they couldn't set up quick enough.
And Ben, how about yourself personally? It was interesting, we always ask people on Twitter questions to ask our interviewees. You put your hand up that you should be asked what percentage of your own assets you have in precious metals.
Twitter.
So tell us.
Yeah, Twitter's really fascinating, isn't it? The whole
Twitter cat.
The Twitter cat. I was going to ask you a question, but I find the whole relationship of social media and finance. You could say it's quite a tricky one because you have to be very careful about what you say. But I really think that it should be embraced by all managers and CEOs of companies. I think it's a wonderfully interactive way, not just Twitter, but other forums, blogs and comments, and to create a relationship not only with potential clients, but some of your clients already. There's a belief that perhaps you should only lift the kimono so far, but I think that in this age of suspicion, I think transparency is key, and every financier says this. I pride myself on my integrity, but I think that a brand has to be built on integrity and the people involved in it. And so I think it's a really wonderful forum, and I've had some lovely conversations. So when I saw yours come up, because I'm following you, I did. I wanted to say to people that I don't necessarily believe this is appropriate for everyone, but because I fundamentally believe that under a deflationary thought process or an inflationary process, those two flip sides of the same coin, that I think gold will protect my purchasing power. So I have probably over 80% of my assets in physical gold, and majority, I would say that a good over half of that is probably in the fund itself, and I also have it in some other vehicles. So certainly I'm putting my mouth. What's the phrase? I've lost the phrase.
You're eating in your own restaurant.
Exactly, that'll do nicely.
And how about the silver? Are you speculative enough to have some silver as well? Or you just
well, the fund does. To talk about a bit about the structure fund, we do. The way the fund works is that the bedrock is this physical allocated precious metals. We've created a structure that we have a very small amount of leverage, that when the market's going up, we're effectively on average invested at 125%, and when the market's going down, we're on average at 75%. Now and again, it might shift between 50 and 150. Part of that structure, we shift between a 12.5% holding in silver to effectively a short 12.5% versus gold when the market's going down. We find that adds a little bit of spice to the fund. I certainly we wrote a piece in 2010 in August. We put out, I believe, cogently why we believe there was going to be a substantial rally. It happened. Fortunately enough, we were able to take advantage of that through some optionality in the market that was cheap, had value, something did have value, and we were able to get that correction. And that just adds. It's not a big part of the fund, because I think you're shifting the dynamics of your fund. We're about creating operational wealth and creating a little bit of capital appreciation, but maintain that operational wealth. You start getting into an investment-like structure where you've got too many equities or too much silver. I think that the volatility in operational wealth gets possibly you corrode the value of that. That's the right phrase.
This operational wealth is an interesting phrase. I think we discussed it earlier, being used by Professor Roy Jastram.
Yeah.
And that's essentially what people have to understand in a potentially deflationary environment or somewhere fairly neutral. If the price of gold stays static for 3 or 4 years, your purchasing power might actually be increasing an awful lot. It's this whole debate against price versus value, which I think we touched on earlier.
Yeah, and I think if I was to be really cheeky, I'd be quite happy if gold stayed exactly where it is and every asset went down. But again, because then I don't have to pay any taxes on it because I've got no capital appreciation, and then I can buy that, probably a better outcome. But hey, by then we'll probably have so many capital controls that I won't be able to take my money where I want to and leave the country. But I'm obviously joking. I think the sad element of it is that at the moment I think there's a feeling that it's all about how do we make money in this. Are we long this? Are we short this? And if I play this whole game, this crisis, that's an ensuing crisis, it's not only a financial crisis, it's a crisis with society. How do we make money out of it? And I think in some ways that's what is really the root cause of problem of our society. Money has become the thing that we're so pressed by, rather than wealth is really a claim. Money is really a claim on wealth, and it's a claim on your productive output. And we've seemed to have shifted that to our wealth is our money, and that's where I feel money has now been corrupted. So when you're corrupting the value of money through debasing it, actually you're corrupting the social values of a country, and that's why people are so, at the moment, all at sea. Because if everything they value life by, which is sadly in the society, the consumerized society we have, if you're basing it on money and suddenly that doesn't have a very stable relationship with what you're buying, it upsets your whole apple cart, and I think that's why I think money morality is a really interesting debate. And I know I sort of went off topic there.
A debate for another day.
Another day.
Well, Ben, thank you very much for your answers and your time. It's been a real pleasure.
Thank you very much.
That's all from us and Hinde Capital today. Thanks for joining us. You can see more interviews on our website in the Research and Analysis section, subheading Guest Interviews. Thank you.